Wow, it feels great to see you both in person, I must say.
Thank
Mark,
you.
I
It's a
have
pleasure
to
to be
ask you,
here.
you're always dapper. Be it in the US, be it in the Turkey, or
Thank you very much.
wherever we've spoken with you in the last 2 years.
Thank you very much.
Who styles you?
Somebody in Hong Kong, I think.
Shankar, no more t-shirt, Twitter polls. I must say, Shankar is the Elon Musk of India. One tweet on even guess the color of the t-shirt that I'm going to be wearing on ET now, and he gets gazillion responses. How does it feel to be all suited up after so long?
Yeah, it feels great to meet people face to face after, I think this is my first live event after, I think, 2 years.
Yeah.
It's fantastic.
It is.
Yeah.
You know, we've only spoken food. We've just come back from lunch, and the last session was also talking about buffet and food. Mark, if I could start with you, what does your buffet look like? Does it have Chinese? Does it have the American hot dog, or does it have Indian food?
Well, I mean, the whole situation here is so exciting for me because I haven't been here for over 2 years, and coming back, it's the same, in some ways, the same feeling I had at the very beginning of my trips to India, but now it's even more exciting because of all the activity that's going on and what I'm hearing from the companies themselves, the exciting growth prospects that they have.
Shankar, you tweet about desi food only, but is the buffet consistent of other cuisines as well, or is it only desi food and desi stocks?
Of course, I love naan and dal.
You do,
So
you
I'm
do.
always tucking into that when I come to India, but otherwise, I try everything.
Shankar, is that the same for you? Variety is the spice of life?
Yes.
Shankar, what about you?
You're talking in food, right?
I'm talking stocks and food.
Okay. No, variety can be construed in many ways. So, but yeah, insofar as investing is concerned, I think Madhu, my dear old friend, we were chatting before the show that I don't even know the stock price of Hindustan Lever HDFC Bank because I have no interest in those stocks anymore.
HDFC Bank is down 20% from its recent peak, but
Yes.
anyway.
Yeah, and I think Lever is down the same over a year or so, thereabouts, right? So we were just discussing, at least that's my view, that these are yesterday's trades. The trade has moved on, and in markets, the only thing my 30 years of investing has taught me is that you have to keep moving because no theme is a permanent theme. Themes keep changing, and the theme that now exists in India is really the small cap space. And I have said this publicly that many times, that I don't see the Sensex or the Nifty giving you outsized returns. But on the other hand, if you go, let's say, under the buffet table, okay?
Leftovers?
The leftovers of the market, the small caps, I'm telling you, I am spoiled for choice. I have more opportunities than I have money. It is insane the amount of companies who either have come up in the last couple of years or existing old line companies who now realize that they cannot do business the old way. They need to change and improve. And yet the valuations are so undemanding, so undemanding. I mean, I have found companies which are trading in single-digit multiples with at least 12 months outlook of 20, 25, 30% earnings growth, maybe 2 years outlook of that much. And therefore, my buffet consists really of the scraps from the rich man's table. So the HDFC banks and the levers can belong to Prashant Jains of the world because they have the size of asset which obviously I don't have personally. They have to buy those. Fortunately, I don't have to buy those. And they have worked fantastically well in the last year, 2 years.
Sure. We'll come to market cap diversification a little bit later. But what we're talking about here, Mark, is whether or not India is the best bet for growth. I know you've been an India bull, but having said that, in the recent past, we've also seen geopolitical tensions. We've seen quite a bit of collapse in the NASDAQ stocks as well. Indian stocks back home. There's been a lot of concern, and I'm sure Shankar would even voice that opinion about how richly valued some of these large cap companies have gotten, and whether the big can go bigger from here. Can they really more than this or not? And whether the price that you're paying for those stocks is justifiable or not. But the question that I'm asking right now is, where does India stand? I mean, I know you do believe in the India story, but right now with the geopolitical tensions, with input costs rising, steel, commodities, labor costs, crude, what have you. Is India in a comfort spot or not?
You know, when you're in our investment business, you realize that at the end of the day, you can make predictions about the macro environment, you can talk about GDP growth, you can talk about inflation, et cetera, but at the end of the day, you find that there are opportunities in almost any environment, regardless of where the economic activity is or where the GDP is going. And that's certainly true in India. The opportunity in India is because of the numbers. You're talking about 1.2 billion people. You're talking about an average age of what, 26 compared to China's 36? So just given that fundamental structure of the economy, the fundamental characteristics of the economy, you know there are great opportunities. And interestingly enough, on this trip, we're particularly interested in the tech sector. And by the way, I agree completely with you. The value now is in the medium and small cap area, which is why we don't believe in buying the index.
Correct.
I don't believe in buying an ETF for India. I believe in buying specific Indian stocks that have good characteristics. But one of the most interesting things I found in talking to one of the software companies here in India, it said about staffing. How are you doing with your staffing? They said, we're having a real difficult time. I said, well, I suppose you go to IIT, you know, the top tech university?
Institute, yeah.
And they said, yes, and we have to pay top dollar, but most of the people we're talking to don't even want to talk to us. They're starting their own company. So you're having this incredible vitality, this entrepreneurial activity, which I think is so exciting. And that means down the road, we're going to have great opportunities for investing.
No, in
But
fact,
Shankar, you're not,
no,
go
I
ahead.
want to add to what Mark said. And by the way, as we just discovered over lunch, Mark and I live like three minutes apart in Dubai.
In
Marina.
Dubai.
Yeah. And Dubai being a global city, you know, we are fortunate to meet people from many, many different countries. And there's rarely a day when I don't come away, you know, feeling enthused about the fact that I'm from India and my field of play is still largely India. Because when you meet people from Sri Lanka, for example, I met a gentleman for lunch in Sri Lanka, last week, he's from Sri Lanka. The situation is horrendous. You meet people from Pakistan all the time. Situation is horrendous. You meet people from, obviously, Europe all the time. One of our major investors in a fund that we run is a German gentleman, old line hedge fund manager, now manages, basically allocates capital. And he told me that I think the country for the next 10 years is India. He's a 72-year-old gent, an old hat in investing. He's never been to India, but he says that whatever I know, sitting at a distance, there is nothing that compares even remotely with this opportunity. So there is nothing not to like. I mean, it's simply at this juncture, and that's what, again, we were discussing over lunch, that the flow of capital has so few good homes today in this world. You know, you can't go to, obviously, large parts of Europe because that's really been in a decline for decades. China is problematic. Japan, we all know, is up and down. Other parts of Asia are, again, in some you know, sort of bother. US, while still being a great market, no doubt, still has its own problems and challenges with rate cycle and everything. Very few options left in this world, whether you're talking FDI investments or FII investments or even debt investments, than India. So it's just a beautifully sweet spot in the economic history of the world that almost every factor you want to look for in an investable market is right here in India. It's just rare to find such situations.
So Shankar, let's get to the point, and I'm sure our audience also wants that. Where do we look? Table ke andar kya mila?
So under the table, I mean, you're finding, I mean, by the way, I must say this, Mark, he may not remember this, I met him at the Oberoi. There's a restaurant called Kandahar, I think 28 years back, 94. Okay, we had lunch.
That's when I was 16 years old, right?
Shankar was 5, don't you remember?
Correct. And Mark had a shopping, so at least a visit list, and he showed me that list. And he said that, can you set up meetings for these companies? I looked at the list, and on that company, Mark being a value investor, he had looked at stocks which were 4P, 5P, 6P. And I looked at that list of stocks, and there were companies like Garden Silk Mills and Transport Corporation of India. There was Mafatlal Industries and all that. And I said, Mark, you know what? I mean, in India, you don't buy 5P stocks, because in India, the way we look at P is that the P reflects the number of years the company is going to be in business. And trust me, most of those companies went out of business in 5 years. But this time it is different. There are 5P, 8P, 10P companies in the small cap space. They are definitely not going to go out of business in 10 years' time. I see very robust business models. The good thing is that the broad economy, while it is doing well, the growth is still patchy. For large companies, for example, a Lever or a let's say the banks, they need a far larger tailwind of economic growth for them to grow their numbers substantially from here. But for small companies, there is adequate pockets of growth available. You could be a regional snack food player, and you can do $200 million in sales. I was reading an article in some paper that the spices market in India is $10-12 billion. Spices, which is your daily, the stuff you put in food, and of that, most of it is unorganized. And now imagine that $10 billion has not even made its way to the organized players. That's the size. These are all small regional brands selling in Ludhiana or selling in down south and whatever. Yeah. That's the real opportunity in India, that you go hunting in the countryside, you will find companies who are like maybe $50 million in revenue, but they can go to 150 in 3 years' time. That kind of delta, I at least do not see happening for the larger companies.
I can already visualize that Mark is drawing up a list in his head about the companies that he wants you to
By the
make
way,
him meet.
it's a very interesting point you made. I've changed over the years my whole view of what parameters to look at.
Correct.
And nowadays, I don't look at PE.
Exactly.
I don't look at price to book, because the whole environment has changed. The interest rate environment has changed, and the way companies grow has changed. So what I do is I look at return on capital, return on equity.
Cash.
And then I look at debt. Yeah. Particularly now, very important. And of course, EPS growth.
Yes.
But these are the kinds of things that I'm looking at, and we find so many companies here in India, unlike so many other markets around the world, that have very good numbers in those characteristics.
Yeah. In fact, the interesting thing, the other thing is, I guess this forum is more about a more international flavor, because the previous one was more the local part. And two markets
No, we won't stop you if you tell us about your stock holdings.
So what I wanted to highlight was, I've seen over 25 years, the world has always found US markets to be expensive and India to be expensive. They found Russia to be cheap. They found some other markets to be cheap. And guess what, where it has led them, right? The thing is, these are quality markets with quality companies, and sometimes you have to pay up a bit for quality. You will never find greatness in low single digit multiple. It's rare, you will, but not all the time. And therefore, as Mark said, we have to adjust our strategies rather than get fixated on a hard number that this is the P at which I like it or I don't like it. In India, there are quality companies. They have gone overboard, like the Levers and all that, but there are still, they still did a lot of good to most investors who bought in when they were 60p in the 90s. They continued being at 60p for 15 years. They delivered like 18% CAGR in terms of their numbers. So these two markets, I've seen the world has generally said too expensive, we will not put a lot of money into it, and they are the two outstanding markets over 25 years. You take a look at ex-India and ex-US, look at all other emerging markets, largely disappointing or very not even rates of returns. But India, I was looking at the data, EMs, I think 4.5% CAGR over 20 years, India is like 9.5%, US is 12.5%. The gaps are like 2 or 3x relative to practically every other market. This is broad data, 25-year return. Just look at Indian returns, look at US returns. Those two are in one corner, and the other corner is all about negative returns or zero returns or 2% returns or 4% returns.
But
And
Shankar,
these two have been expensive
sure.
all the time.
Sure. No, I get your point completely. But just coming back to what our audiences can draw from here, it's easy for a person like you to search for those companies which are small caps, waiting to be mid caps and eventual large caps. And I understand your parameters about don't look at PE, look at their growth rates, ROEs, as well as cash flows, etc. But for the Aam Janta, for the retail investor, how do they go about scouting for these hidden gems? Are there themes that they look at? Do they invest with people like you? Is that the only way?
Of course, they must invest with us. That's the only way. By the way, our fund did exceptionally well last year, thanks to the Indian stocks we have in our portfolio. So I have to thank
So give us a
India.
flavor of what your portfolio has, the India portfolio.
So the Indian portfolio has companies, a really varied set of companies. One is in the diagnostic area, the other is in the tubes area, and the other is in software. So we're very much technologically oriented. But one of the...
Are these IT services? Are they new age tech companies?
Well, they use technology, and we love companies that are in traditional industries, or let's say industries that have been around, but are using technology to upgrade their efficiency and their profitability. And that is key to ROE, ROI, the use of technology to improve. But one of the things I think we have to discuss here is ESG plus, by the way, we added C, culture. ESG plus C.
What's the C, Mark?
The C is culture.
Culture. Okay.
ESG, environmental, social, governance plus culture. What we found is that by looking at that, in addition to all the numerical parameters, looking at these factors has really helped us a lot because it's reduced our risk. If we look at the environmental impact of a company, we can reduce the risk. If we look at the social impact, the same thing. Governance, of course, is so critical. And the culture within the company is, again, the life of the company. It makes the company great. And what we found in India is that the transparency is very, very good. In other words, Indian corporate personnel are very good in communicating what they're doing, are willing to talk to us about what we're doing and what our objectives are and what their objectives are. And we've been working with a number of these companies to see how their ESG plus C characteristics can improve. So I think
I don't know if the recent ITC and TPC Coal India investors would agree with you. I think off late ESG has gone for a bit of toss, but I get your point, yes.
So what I would advise for people who are going to buy individual stocks is they look at that, as well as the numbers, of course, but very critical is the ESG plus C. Not because everybody says, you've got to be good to the environment and everything, but in order to reduce risk. This is the best way.
Sure. That's also another very, very important criteria. Shankar, how does one scout for the hidden gems?
Do you want the actual method?
Yeah.
It's very simple. When we started our careers, there was no internet. Okay, so Mark has been running around the world meeting companies. He's a legend in that. So he's been an inspiration. Each time I feel tired, I say this old man has been doing this for 35 years.
Looking the same for the last 15 years at least.
I should be doing the same, and that's exactly what I'm going to do in the next 2 days, Mark. I'm going to go around different little corners of India figuring out companies. But the method is this, that most retail investors will not have management access. I mean, let's accept that's a challenge for them, okay? But without that too, running basic screeners, okay, is this very simple hack to get to a list of companies, okay? Tools are available online free of cost. I mean, I'm amazed the amount you don't need a Bloomberg terminal anymore. I mean, at least if you're doing just India, amazing tools online. Even I, the professional investor, I use them, a lot. You will find if you do basic good quality screeners, come across 5, 10, 15 names, then a lot of the information today, thanks to our regulator, is so publicly available. It's fantastic. there's no longer that little cozy club of giving out information selectively to analysts. Every presentation up on the stock exchange website in real time. Managements have to address everybody. They cannot pick and choose that I will only talk to 5 analysts or 5 fund managers. There's no longer that little cozy club. It's such an open information flow today that I'm amazed at the level playing field that our regulatory mechanism has given to small investors. It is fabulous.
Sure.
And believe me, it's not there in other parts of the world. I can tell you, it's still, even in the US, it's still a highly closed club, despite regulations having changed. Here it is open. So therefore, you have screeners, you have the stock exchange websites which give you a lot of the real-time presentations. After that's where the thing is. That ultimately, this game works on picking 25 good stocks. In my view, we'll never pick 5 great because you don't know what's going to work, what's not going to work, right? You pick a little portfolio. If a sector looks good, I remember back in the 90s when the IT sector came into its own, we had no idea whether Infosys was going to be the winner or TCS wasn't listed, but Wipro or Satyam or a couple of other companies. So we went and bought all of them because the sector looked good, but we have no idea because there was...
So which is that one sector where you're buying all of it?
Oh, there are many. So by the way, ESG is an amazingly important thing to look for. There are debates around the G part, but leave that aside. That's an important consideration. And again, there are tools and metrics which can tell you that on the G part. But the E part, which is the environment, I think for a country like India, which has neglected it for a very long time, that's going to be a big thrust area for the government. It already is. And more importantly, if you look at the orders coming from the National Green Tribunal, they are draconian. They shut down plants like that. There's no longer the option of dumping effluent into the backyards or polluting the rivers. So companies that help clean up the environment or help solve waste, industrial waste or plastic waste or things like that. So I think that's a great area to be in. If you can find 5, 7 companies, I don't know who's going to be the winner. You can buy a small proportion of each of them. So do the screeners and then do a sector approach rather than taking stock by stock approach, because that for a small investor is simply not scalable.
Stay away from startups or be on the lookout?
You mean listed startups?
Yeah.
So again, most of these companies have hit the market at a they've already been, the cake has been fully baked. And wherever it's VC driven, where the founder owns 5%, 10%, the VCs call the shots. And understand this very important point that if I'm a founder taking my company public, it's in my best interest to underprice an offering rather than overprice, because I'm not a seller in that offering. I'm raising capital. My continual flow of capital depends on how well my stock did after the IPO, not how well it did in the IPO. Correct. Or in the IPO, right? It's not the number of times it was oversubscribed. That's a vanity metric. The real metric is after it listed, did it double, triple in the next 2 years or 4 years' time? Because I'm going to need that tap of capital permanently to grow. For a VC, that's not at all a consideration. He's there to sell and take his carry and retire to the Bahamas. So you have to understand there are different considerations when these startups go public, because it's the VC or the bunch of VCs who call the shots with the bankers and not the founder. The founder is a little kid, who just got lucky and he's got 7% in the company. He has no say in this anymore.
Right. We're running short on time, Mark. If India was a listed stock, would you bet on it for the next 5 years or 10 years or for the next foreseeable few decades?
I don't know whether I'd buy it in an IPO, though. But if it was listed with a track record, I'd buy it, yes. That means I would buy it.
Shankar?
100%. I think, like I said, all the confluence of factors, just zero down on this market and this country. It's just rare to have found that kind of a situation, but it is so.
Mark, I remember the last time we were on this particular panel, you stood by when we had a Bollywood actor. Do you remember? Yes. Yes? Do you know that Shankar can sing really well? I was telling him the other day that he should actually play back for movies. Would you like him to sing?
Yes.
Shankar? A song for the stock markets, maybe? For India, for the bull run, anything?
Okay. So the stock market has been a little tricky lately, right? At one level, it is showing a bit of bearishness because of HDFC Bank mergers and inflation. But on the other hand, there is a little stealth bull market on in the small caps. So this reminds me of a song by Mohammed Rafi.
Your favorite?
Yeah. खुली पलक में I will translate it later for you. खुली पलक में झूठा गुस्सा, बंद पलक में प्यार, जीना भी मुश्किल है, मरना भी मुश्किल, आंखों में इकरार की झलकी, होठों पे इनकार, जीना भी मुश्किल है, मरना भी मुश्किल.
Amazing.
So
Now,
what this means is that in your when you speak, you're talking a very negative language, but in your eyes, I can see true love, which is what I can see in the stock market, right?
for India. So you missed the ride on cricket, but you can definitely give a shot to playback singing, Shankar.
Okay, we'll give it a
The
shot.
audiences agree with that. But gentlemen, great speaking with you. Thank you so
Thank
much.
you very much.
Thank you.
Thank you.